Morning all. How are we all doing? Happy Monday. I'm in my civvies today because it's holiday. I'm going on holiday tomorrow, so I'm in my civilian clothing. Let you know. Just trying to wear as little as possible before going on holiday. You know that skanky bit you have before you go on holiday where you wear the same clothes for 3 days because you don't want to do any washing? I'm in that phase. How are you all doing? Everyone have good weekends? Morning, Evil, Church, Callum, Marco, Neo, Michael, Steve, Mumo. Günaydin. Turkish for good morning, is it? Günaydin. Günaydin. I will probably find that out on Wednesday, hopefully, if my flight leaves. Couldn't have picked a worse time for a massive IT outage, could we? But anyway. Morning, Chucks, Dallas. Evening from the Gold Coast. Morning, George, John, FTNet. Even though there was no explosion on the Euro-US dollar, it was good advice from me to get out of the market before the weekend starts. Feel much better not babysitting my losses. Yeah. So obviously Friday I said, just be careful this weekend because of Biden, and it happened. So he's resigned. Not a massive amount of movement on the US pairs, but nothing really at all. So market not really having any reaction to the news in the form of gap or anything. We had a bit of movement, but nothing dramatic. So there was no big gaps, no gap fill plays running or anything like that. So market really didn't pay any attention to it at all. So other than that, over the weekend, there's not been any other news. So obviously Biden resigning from the race means obviously he's just going to see out the rest of his term as normal. And Kamala Harris has been put forward as the his running, obviously his nomination, if you like. But we'll see what happens over the next few weeks. So obviously there could be some movement coming in the US. There usually is around elections, but I think what this has really done for America has opened up the race, because last week it was pretty much a done deal that Trump was going to get him, because Biden was breaking down every 5 minutes, wasn't he? Now, if we're putting someone like Kamala Harris up against Trump, there's a big possibility that that will swing it big style. So what will happen to the US dollar over the next 4 months running into that November election, we'll have to wait and see. But markets certainly don't seem to have paid much attention to that. It was probably factored in. We kind of knew he was on his way out, so I don't think it's really made any difference. Other than that, there's no other overnight or rather weekend news. So that was pretty much it. The CPI numbers came out. Sorry, not the CPI numbers. The retail sales figures came out for the Canadian dollar on Friday afternoon. That was pretty much as forecast. We were 0.2 out on the forecast, which was a drop. Apart from that, that was it Friday afternoon, because I was on Friday morning. So not a lot else really happened over the weekend. So we'll have a look at this week. We'll have a look through all the FX pairs. We'll go through everything. Obviously, I'm off from, this is my last stream this week. I'm back on Wednesday the following week. So if you go onto the live room on the website, that's the upcoming schedule. So today, that's today. Tomorrow until Tuesday next week, no live streams. Next one is going to be Wednesday, and we'll do a full analysis on that Wednesday the 31st, which also happens to be the last day of the month. So quite possibly a large mover. January, February, March, April, May, June. So it's not end of quarter. I always have to do that. I never know where end of quarter is. Rubbish, isn't it? Been around 50 odd years. Still don't know what end of quarters are. But yeah, so June was end of quarter. End of quarter, we tend to get much bigger moves than end of month. But end of month, we get end of month sell-offs where they basically balance the books, get the profit in the bank. So that Wednesday is probably going to be a fairly big day. So we will see that next week. But starting, let's just have a look at the markets at the open. Well, that's good. Let's finish Finish off the pre-holiday with a nice hedge on the FTSE. No trade on the DAX. So DAX, no pre-market break. Your 5-minute opening range is pretty much exactly the same as the 15-minute, or rather 10-minute pre-market. Yeah, FTSE just got tagged in long and short on that one. So targets are really easy. Last week's high, upside, which is 125 ADR. Downside, yeah, I don't have a problem with that downside target either. That's what they're buying up, or have been buying up last week. So we're likely to see more attempts to buy there. That might not be a bad target to the upside, actually, today. I'm just going to move targets down into that propulsion gap for the FTSE, which is a 2-hour upside target. Not a lot, is it? That's a bit too close to get out of a hedge. I'm going to leave it where it was. See if we can get a run on the DAX to pay for the FTSE this morning. But not a lot of volume so far. Morning, Yoko. So we'll go through all the FX pairs this morning. We'll have a look at all the ADRs. There's quite a few ADRs already this morning. RSI's quite busy as well. So, but we'll start off with the usual news. So today, obviously, is Monday. It's dead today. There is no news today. So quite often we get rotational days when there's no news. So be prepared for not an awful lot of movement today. There's nothing to move the market today. Tomorrow, exactly the same. There's no news tomorrow either. We've got home sales and Richmond manufacturing tomorrow, which doesn't tend to do a lot either. So basically, the week doesn't actually kick off until Wednesday. So I will be arriving at my hotel probably around about that time. I've got the worst flight in the world. It leaves at 9 o'clock tomorrow night, which means I get in to my resort at about 6 in the morning. That is assuming the flights leave on time. So just think of me when the Euro PMIs are coming out at 8:15 on Wednesday morning. I won't have slept for 24 hours. I'll be very grumpy and hungry. So that's your first news of the week. It's PMI week this week. So Euro PMIs with your German PMIs. The French PMIs with the German PMIs make up the Euro, which is why that one is orange. So the result of those two is what the vast majority of the PMI is based on. So we've got those two Wednesday morning. Be careful if you're trading the DAX Wednesday morning, because you're likely to have a very flat session until 8:15, because they won't want to put a load of stock movement in before they know what the Euro is going to do. With 9:30, we've then got the PMIs for the pound. So these are the Purchasing Manager Index prices. So a little bit like the Producer Price Index leads into the CPI. CPI is the Consumer Price Index, which is what controls interest rates. So these are inflationary figures. So very, very, very important, and they feed into CPI. So those are coming out on Wednesday. So that's your first potential market movers. Canadian rate is coming out. They are forecasting a drop. Okay. So we were talking last week about what the potential forecast is going to be for the Canadian. So if we look at what's happening with the CAD at the moment, we were up at 5%. We're now down to 4.75. We dropped 0.25%. Inflation is coming down at 0.2%. So it's coming down at a fairly nice rate. It was the month before as well. So we're down at 2.7. Everything's trickling towards that 2% very, very nicely. So absolutely no reason why we shouldn't get that interest rate drop. Canadian unemployment is high and rising. So again, something else that puts pressure on the Bank of Canada to get that interest rate down. The higher the interest rate is for longer, the more unemployment you receive. So they want to get that down as fast as they possibly can. So we are forecasting a drop to 4.5, which again is bearish Canadian dollar. If you look at that in essence compared to what the US is doing, they are up at the 3, still coming down at a fairly decent rate, but up at 5.5. So we're looking at a September rate drop from the US as well. So all starting to get bearish in the US. If you look at the Canadian, you might find that this week, today and tomorrow, we get some fairly decent movement in the CAD. This is the Australian dollar, which is why this has dropped today. But you might find we get some serious movement into the Canadian dollar as well, because they'll want to get the orders placed ahead of the interest rate decision. So as you can see, Aussie dollar's been rallying against the CAD. CAD coming down against the Swissy. Euro rallying against the CAD. Pound rallying against the CAD. So they have been weakening this Canadian dollar, expecting that interest rate drop, and they're going to get it. So if we get that 4.5, the market isn't necessarily going to tank the Canadian dollar, because it's already factored in the fact that they are going to drop the interest rate. So there's a probability you could find that unravels. We get some strength in the CAD while they do a profit take move to get in on the next leg down. So wait and see what happens with the market on that. Just to throw a fly in the ointment, the US dollar releases its PMI figures at the same time. So this is also 15-minute after market opens. So watch the US indices that day. US indices are probably going to flatline until 2:45. So the 2:30 open, probably not the best one to trade this week on Wednesday. So just be aware of that. So if we get a big strong move either up or down on the Canadian, and we get a big strong move on the US dollar at the same time, that will skew the Canadian price. So it will, because they tend to move together. So it could be a very, 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 very volatile afternoon for the US and the CAD. Press conference is at 3:30, 45 minutes after the rate announcement. So they'll be drilling into the Bank of Canada to find out what the forward guidance is. Usual stuff. I would expect them to come out and say, yeah, we've dropped it again because inflation is coming down. We'll be data driven. As long as inflation continues to drop, we will continue to drop interest rates. So that's all we get out of press conferences now. We're data driven. We'll wait and see what the data says. And they'll say that we are no longer aligned with the US dollar, in the fact that if the US dollar doesn't drop its rates, we won't. They do what the hell they like at the moment. So yeah, so there's the CAD. Then on Thursday, you've got the GDP for the US dollar and unemployment claims. So GDP is obviously not as important now as it has been in the past, because we're more interested in what's going on with interest rates at the minute. But that has got potential to move the market as well. Apart from that, there's not a lot else going on. We've got Lagarde speaking at 4. Might get something out of that. And then it's PCE on Friday. So it basically, Wednesday is your pivotal point of the week. So very good chance, if we get some strong movement today, tomorrow, for any reason, we'll get reversals off the midweek. So we'll see what happens. But that's your news coming up this week. So it's all revolving around Wednesday. That is your key day this week for pretty much everything to do with the euro, the pound, the CAD, and the US. Yeah, all lands on Wednesday. So Wednesday will be potentially payday, which would be nice. So that's your news coming up this week. I'm not here for the start of next week either. Monday, we've got monetary policy report hearings. They don't tend to do a lot. We've had a change in government, though, so you might find there might be something in there of interest. We're looking for anything out of the Bank of England, basically, to say that we're going to drop interest rates, but we'll wait and see on that one. You've got your CPI for Germany on Tuesday. They release in 5 states. Usually we have that result by 10, 11, something like that. And then you've got consumer confidence and jolts on Tuesday afternoon. I'm back for the Aussie CPI figures and the BOJ interest. Oh my God, look at Wednesday. So my first day back next week is crazy day. So we've got the CPI for the Australian dollar. We've got the Bank of Japan interest rate decision and their press conference as well. That'd be fun. So that's all hitting in the morning. So by the time I come on, we'll be ready for the Eurozone CPI ahead of non-farm employment change, the Canadian GDP numbers, the US rate on the evening. So it's FOMC, the big one. Leading into the Bank of England on Thursday. So the week I get back, basically, we've got an interest rate decision coming on 3 of the major currencies. It's going to be fun, isn't it? So yeah, I'll be babysitting stuff until then. Morning, Franco. Morning, Ismet. So so that's a look ahead at the news, what we've got coming up. So as I say, everything revolves around Wednesday this week. So I have, obviously, when I go on holiday, I have to babysit my trades, my open positions, which I always do. But the EA obviously takes care of most of it for me. I have switched over the position trader EA for new entries to be running on H4 RSI 14. What did I do? Yeah. 14, 80, 20. What did you leave it on out? I'm going to have a look. I can't remember what I did. So basically put it into kind of a maintenance mode, if you like. Yeah, no, I went with 1 hour, 80, 20. Sorry. Yeah, I knew I couldn't remember what I'd done. So basically what I've done is, because I'm going away, I don't want to take any new positions unless it's a really good position. So what I've basically put the EA to do is on the hourly time frame. I've left it on the hourly time frame, and it's only going to take 80 or 20 extensions. So it's got to be really extended to get into a new position. And then I'm looking for 0.5% to get out, basically. So I've put it on a really conservative sort of mode, so that it's not going to get into positions that I can't handle while I'm away, because I don't want to be checking the charts every 5 minutes. And obviously I'll just be checking the positions I've got on at the moment. I've set TPs on everything, which I go through when I'm going through the pairs. But so everything's got TPs set where I want them to be. So when I go away, basically, I try to be as hands-off as possible with it and just let either the trade play out, hit target, or obviously the EA just scales me in as necessary. So, but I do check it sort of in the morning and in the afternoon. So we'll go through the ADRs, and then I go through all the pairs, look at where everything is. So today, obviously, we've had the Asian session. The Asian session's been really big today for Aussie and New Zealand. So as you can see, we've had quite a big sell-off in the Australian dollar today, all come down quite hard. Aussie New Zealand hasn't, because obviously the Aussie and the New Zealand have both dropped. So when you get two pairs dropping together, that cross tends to do that, because obviously they can't both drop. New Zealand Swiss come down, New Zealand US come down. So everything's come down Aussie New Zealand. So the ADRs today are all Aussie New Zealand based, as you can see. We've got one that isn't, which is yen based. So we've got a little bit of movement coming in that yen this morning as well. But we'll have a look at that in a sec. So Aussie Swiss is an ADR hit to the downside. As you can see, we just tapped into it. We are extended below the 30 level on the RSI as well, because we've had a fairly decent drop followed by an accumulation, followed by another little drop this morning. So good entry opportunity there. Reversal alert's already gone in straight off of 8. Look at that for hitting ADR. So it's hit its average daily range. We've had the reversal alert kicked in. So looking to push back up into propulsion. Better to look at the hourly. Pretty much the same spot. So scalp up into potential resistance there. Aussie dollar yen has also hit. So you can see the yen pairs. Big, strong move again. More strength coming into this yen. Market really wanting to pile into the yen, finally. So I'm not trading the yen at the moment. It looks to me like we are starting a reversal in the yen. So it looks like we are starting to get that strength in. At the moment, with all these yen pairs, I want to see a really good market structure forming. But the trouble is, obviously, when you've got an intervention move like this, everything is so big and so extended. Everything is screaming for a pullback. So it's really hard to pick a direction on this. The yen is so difficult to trade at the moment. But Aussie yen and New Zealand yen, obviously, both come down twice as hard as normal. So the yen's been pushing, the Aussie and the New Zealand been dropping. So this is obviously the perfect storm, gone down twice as fast as everything else. So there is a mean reversion opportunity on all of these. Obviously, don't get greedy. You're going to scalp it. So we know with the yen, obviously, they've done 2 interventions now. There's no reason why they can't do a third if they want to. So it's unlikely because it seems to be working, the intervention. So it's more likely we'll go back into normal market structure now. But wait and see. So you've no reverse alert on that New Zealand yen yet. Aussie yen, also no reversal. So that would be your entry when we get back above ADR. Just don't get greedy with it if you're going to take it, because we don't know what is going on with that yen. Euro odd has hit. So again, these are all the same. So it's an ADR hit to the upside. We've got 125 on the euro odd. So that's more extended. The pound odd is also more extended. So a little bit of European strength, a little bit of Australasian weakness. So there's a big push up there. Nice opportunity for a pullback. These are really extended at the moment. Euro odd and the pound odd. So this week, we should really see at least some kind of retracement into this to pull back. The market is absolutely exhausted. Look at the 4 hours on these. Yeah. We had a parabolic move, flag break. Yeah. So worst case scenario, we're going to come up and test the monthly high, which I'd be surprised if it can get all the way up there without pulling back. It might be able to. If it does, it does. But you've got lovely divergence showing now here. So got bearish divergence. Market ready for a pullback on these. So you've got an ADR hit to the upside on that one today. Fundamentals are also short on this because you're not going to get a reverse alert on this one, fortunately. If you're using the MRA EA, there's your entry. If you're using Position Trader EA, as you can see, I'm already in. Yeah, so the fundamentals on this are short. Euro is reducing interest rates, and another one is coming next month. Australians are not reducing interest rates, and they have mentioned the possibility of potentially one more rise if necessary. So fundamentals are bearish, and we are basically in bearish market structure on this at the moment. So this is absolutely spot on for next leg down. So it looks good for shorts. Euro New Zealand also extended to the upside. So ADR, you've already had a signal on that. It's already playing out. Look, there's your M pattern reversal. So that one's already playing out. And pound odd, which is basically the same as the euro odd. You're going to get a much tighter entry on that one, though. In fact, we made a new high there, didn't we? So there would have been an entry. Dependent on how you had your market reversal alerts indicator stroke EA set up, you would have had an entry there. If you're using wicks to the left, you probably wouldn't have. We made a new high there, so that's the low. So yeah, you may have got an entry there. If not, your entry is going to be there, which is exactly the same spot as you would have had before. So yeah, so good looking short opportunity on the pound odd. Again, Australian bullish, pound. We're waiting for Bailey to confirm interest rate drop. The reason this market is rallying is because he hasn't. The market had factored in a drop on the pound. He turned around and said, actually, I know we've hit target, but we're not quite there with services. So nothing you can do about it. Basically, the market was fooled into thinking we were going to get an interest rate drop at 2%. We got the 2%. He turned around and changed his mind. Changed the goalpost, changed direction. Nothing you can do about it. So, yeah, pound odd, they're obviously scaling back out of the drop they started to put in ahead of the interest rates, which we didn't get. So we've broken up above today, interestingly, on this one, that double monthly high that we tapped into on Friday. So Friday, we hit the monthly high after that parabolic move. I mean, this level of 85 on the 4-hour RSI just doesn't get there. We looked at this one last week, didn't we? I mean, it's just so rare to get up to this sort of level. And every time you get there, it's usually very nice pullback starts. But yeah, we're there. And we've just broken out as well. So the chances of this breakout holding are, I think, very few and far between. The market is exhausted. There's nobody left to buy basically. There's no one up here wanting to sell. This looks to me like a false breakout, and I think we'll probably find ourselves back down here. Problem we've got with this one this week is the news doesn't come out until Wednesday. So what it's going to do today and tomorrow, we'll have to wait and see. If that Aussie continues to drop, it's going to continue to rally for a couple of days. But that PMI figure comes out as red. Again, that's much more pressure. If the Purchaser Manager Index comes out red, that will feed into the CPI. CPI is what drives inflation. It's what drives interest rates down. We've already hit target on it. Yeah. So not only should we have already reduced the interest rates, if that comes out as red, likelihood is CPI is going to drop next time round, which again puts more pressure on dropping those rates. We've got a new chancellor in charge who's going to want to make a good impression. Best thing you can do first day in the job, get the Bank of England to drop those rates. Yeah, everything is pointing towards a drop in those interest rates for the pound, which is going to be that. Just not happening at the moment, is it? Bank of England not saying a word. So stuffed us, basically. Not the first time, won't be the last. It's what they do. So if you look where we are at the moment, 125 ADR, we've got this previous M pattern reversal up there. Lovely propulsion gap move, which we tested twice. Looked like it was a third test. So yeah, this is resistance. So very good probability of coming back down to test those lows. If not, 50% pullback at least on that leg. So there's your target. Loads of room to the downside on that one. So that's a good looking, this is all of the ADR, obviously. There's your analysis on the pound odd. Remind me when I get there, I've already done it. So there's your ADR extension. And you've also got New Zealand yen, which we've kind of covered. So those are your ADRs today. The yen's up to you. I'm not wanting to stand in front of this steam train at the moment. And if you look at what's happening with the US dollar yen, let's cover the yens first while I'm talking about it. If you look at what's happening with this US dollar yen, obviously, this intervention didn't even get a 50% retracement. We didn't come back and test. It's just basically, second one came in the next day. It was about 150 ADR, wasn't very big. We tried to push back up again. Bang, they hit us again last Wednesday. Yeah, pulled up again. They're hitting us again today. Yeah, they are buying the crap out of the yen at the moment. So this looks like, when you scale out, the start of that was the last intervention. And that is what we got after the intervention. It was roughly 3 months of selling. Yeah, market absolutely exhausted, taking profit on that leg. Market absolutely exhausted, taking profit on that leg. Market absolutely exhausted. It's the same old cycle. Banks make money on quarterly basis. So there's time for them to get out of that position. So it is starting. We're kind of halfway through it already. You know, this is, I keep saying it, the climbing up the stairs, falling down the elevator shaft pattern. Climb up the stairs, fall down the elevator shaft. That's what happens, basically. Panic sets in when you see your P&L disappear and the banks and institutions sell. So this leg started here. 50% retracement back down to the 152 level, which is this area here, which has been tested multiple times. So yeah, it's coming in the right direction. So there doesn't seem to be any need for the Bank of Japan to intervene again. It's had the desired effect. So this was the last intervention attempt, which failed. This one seems to be working. That one seemed to be working until it didn't. So, you know, don't write this off yet, which is why I'm just not paying any attention to it at the moment. The yen, I'm not interested in trying to predict what the Bank of Japan is going to be doing. They're trying to control inflation with interest rates by putting it up by 0.1. Yeah, they are miles and miles and miles behind us. They're at 0.1. We're sitting up at 5.5 in the US. Differential's too big. Yeah, you need to put 1%, 2% on that. Yes, then we'll start thinking about listening to you, trying to control your inflation with interest rates. Don't forget, Bank of Japan interest rates coming out end of the month. Yeah, so again, forecast 0.1. It's not going to do anything, is it? So Don't know. So all these yens, obviously intervention is holding at the moment. Yeah. So we've already unwound to the previous intervention attempt on the New Zealand yen because we've got a weak New Zealand dollar at the moment. The pound yen starting. Bailey coming out saying, guess what, guys? We've got a date for the interest rate drop. Boom, kiss that goodbye. That one, what's that? 200, big round number. So that will be your downside target. It's only 150 ADR away. Euro yen, again, same thing, coming down. We've already undone 50% of the leg. We've come back down into the previous intervention, which we're sitting out at the moment. It looks like they're just blowing straight through it. So in theory, continuation drop on it. Swiss yen, same sort of thing. Swiss is obviously, again, this is probably the worst, most volatile pair on the planet at the moment. Both of these have come out and said we will do intervention in either a bull or a bear way whenever we fancy it. Screw the lot of you. We won't tell you. We're just going to do it. Yeah. So if the Swiss decide to intervene on this in either direction, kiss any positions you've got goodbye. So it's just not worth even trying to trade at the moment. CAD yen, very much the same as the US yen, unwinding very, very nicely. Canadians dropping interest rates. That's bearish. So, yeah. So, you know, it's one of those things. It looks like it's working like it did last time. So you either walking into a couple of months worth of continued strength, in which case you want to buy every pop, or sell every pop, or you're not. So, you know, if you want to get into these yens right now, you're looking for any RSI extension signal to the upside or any ADR hit to the upside to try and get a short position on. But if that intervention unwinds and doesn't hold, you're just scaling into something you're being drawn down for weeks and weeks and weeks on. Look how long it takes in normal market conditions to put a move of that size in. Look how much time it takes to undo that move. We undid the whole lot in a week. It took months to get there. It's just not something you can position trade at the moment. You can trade it with a stop loss, no problem. And it's probably quite a profitable thing to trade with a stop loss. But I've had so many people messaging me saying, why aren't you buying it? Look at it. It's obvious. Yeah, all trends are obvious when they work. When they suddenly turn into market structure shifts into bear trends, they're not obvious anymore, are they? Yeah. So if you think this is going up and the yen is going to devalue and the intervention is not going to hold, buy the crap out of it now. It comes down to what your bias is on whether or not that Japanese government is able to do anything. We don't know, so I'm staying out. It's a bit like, this has become, to me, oil and gold. I just do not understand, and I don't think they understand what the control mechanism for moving this up and down is anymore. It's not interest rates. It's not inflation. Intervention has a 50-50 strike rate. How else do you move this thing? Randomly. Same as oil and gold, yeah? Gold is a supply and demand-based product. You lock a load of gold up, gold price goes up. You get a load of gold, unlock it, gold price comes down. Oil, what's the barrel count? All right, that sends it up and down. What's the demand for it? Sends it up and down. Is there a war? It's going through the roof. Isn't there a war? It's coming back down. We know what drives them, but what drives them changes on a weekly basis. So it's virtually impossible to have a long-term bias on anything. This is the same. All the ends, no long-term bias on it anymore. Market doesn't know which way it's going because it doesn't know what's driving it. Is it the Japanese intervention or is it economics? Both. Which one is going to happen this week? How can you possibly trade it? The only way you can trade it is with a stop loss using fixed risk reward, in which case it's just flipping a coin. So just not worth trying to analyze, really. Mumo, I understand ORB, SIH were built for M5, but can they still take a trade on the H1? Don't know. Try it. Never tried. You tell me. Go and test it. In theory, yeah. All the EA does is it triggers on time. So you set times in here. When those times are met, it forms ranges and puts orders in place. So yeah, in theory, if you set these to hourlies, you could pick an hourly range of 4 hours. And if the 4 hour range is within a distance of ADR, it will place orders at the time you tell it to. I don't know, though. I've never tested it. It's not what it's designed for. So you're kind of trying to bend something to do something it's not designed for. Whether it works or not, don't know. How far it can bend, don't know. Never tested. Morning, Champagne Pappy. How we doing? Morning, Peter. So we've got a short break on the DAX. Well, it's not even a break, is it? The DAX has put a bear candle in, followed by a bull, followed by a couple of bears, followed by a bull. It's not going anywhere. It's dead. Absolutely nothing. Just while I'm talking about stock indexes, today, or rather this week, is earnings fortnight kicking off properly. So we are here with Verizon pre-market. Tomorrow is the monster day. Tomorrow we have pre-market, Coke, GE, General Motors, PMI, and Spotify. Aftermarket, 9-ish, should be. Google, Tesla, and Visa. And then moving into the next day, we've got AT&T, CME, yeah. There's loads of them. Ford, IBM. You know, it's kicking off. So not only is Wednesday the busiest day this week, Wednesday in the stock market is also the day after the biggest names are announcing their stock earnings. So, yeah, Wednesday is going to be fun. I should be sitting on a sun lounger, hopefully, drinking a Mai Tai. Trading. I better take a photo, hadn't I? Sun lounger, cocktail, laptop open, making millions by sitting on a beach. All the gurus doing it. Aussie CAD. So we'll start off with the analysis on the Australian dollar. I'm not going to go through the RSIs because we'll see obviously RSIs when we go through the pairs, but there are a few good ones at the moment. No, they're not actually. It's Aussie yen and New Zealand yen. So it's the ADRs basically. So ADRs basically are pretty much mimicking RSI on the hourly today, which you would expect. So we got a few Swiss franc 4 hours as well. Again, I'm not trading that at the minute, but kind of wanting to toy with some Swiss when I come back, I think. So we'll have a look at that when I get back. So Aussie dollar CAD, we'll start at the top with the Aussies. Obviously, the bias for this one at the moment is bullish Australian dollar, bearish Canadian. So it's a long. As you can see, it's doing exactly what it says on the tin. So this is obviously buy from a fundamental perspective at the moment because the Australians are not dropping interest rates and the Canadians are. Canadians are also dropping again this week. So obviously this pullback is likely to pop at some point this week. So we've just broken back through support. Again, everything seems to have broken support resistance today. So we pulled back into the support, this propulsion gap here, and tested that on Friday. We got a lovely bounce. So everybody bought it up, put their stop losses under there, and they're all dead today. So it's got a very good chance, I think, of breaking long this one. Obviously, we have to wait and see what the Canadian press conference brings us as to what their forward guidance is on the CAD. But worst case scenario, you'd be looking to come back down and retest this range and then bounce out from here. But we shouldn't put a new low in. So good looking spot. If we get any ADR hits to the downside, you've got a long signal triggered today on the hourly RSI. So good looking long opportunity there. If you're using the market reversal alerts EA, you will be in that today from there. So looking like potential good reversal. Aussie Swiss. Swiss franc at the moment. I'm going to whiz through all the Swissies at the same time, the same as it is at the ends. So the Swiss at the moment, we've got a 1.25 interest rate, which is coming down very quick. So it's the second unexpected drop we've had from the Swiss. Their inflation is below target and still dropping. They don't have any unemployment problems. That doesn't move. So there is absolutely, and again, there's no reason for this to be bullish or bearish, except they will change their mind whenever they fancy and drive it whichever way they want to. The Swiss, Jordan came out after the last interest rate decision and said very clearly, we will intervene with the Swiss franc, either by buying it or liquidating it at any time we deem fit to suit our needs. So they've basically come out and said, we don't care what you think our bias is, what we should be doing. We'll do what the hell we like when we like, because we can. Which we've known forever, because that's why it's a safe haven currency, because it's nice and stable, low interest rates, low unemployment, GDP creeps up. It's a perfect place to put your money if you want to keep it safe and earn a little bit. Yeah. Right now they're saying we can do what the hell we want with it. It's the first time Jordan said that. The Japanese obviously do it all the time. But it's become a lot more unstable to trade because of that reason. And the fact that we are still dropping inflation and interest rates have come down to that, we've got a massive differential now between other currencies. So from the 5.5 of the New Zealand dollar to the US to 1.25, that's a big differential. We've got a 4.25 differential there. Yeah. So you want your money in the New Zealand and the US. So it should be along. Everything should be bearish on the Swiss. So everything should be rising against the Swiss franc, except they can do what the hell they like. This move that we had, if you look on, was it Wednesday, wasn't it? Friday, Thursday, Wednesday, yeah. So we had that massive sell on the Swiss franc there, or rather buy. Yeah, so everything collapsed against the Swiss franc. Remember on the live stream, I was like, let's have a look at the news. What's going on? Why is this happening? Something must be going on. Usually when you see a massive downward movement against the Swiss, something's happening, because everyone's buying the Swiss franc up because there's something going wrong in the world. It's a safe haven. You pull your money out of everything else and you stick it in the Swiss. So usually that type of movement indicates there's a problem, a war, something's going wrong somewhere. There wasn't anything. So this is an example of that manipulation. For no reason whatsoever, they just bought a load of Swiss up. Yeah. It's not as if it was a profit take move or anything. It's just one of those moves. So all these Swiss francs, you've got the potential for this type of movement to happen. After that type of movement, you tend to get shock. Yeah. So when you get these big moves for no reason, that's not really a good example, but you tend to have a kind of shock effect or stagnation in like, what the hell was that? And the market sits around for a bit and goes, what now? Because it's either sitting in a load of profit it wasn't expecting, or it's in a load of drawdown it wasn't expecting. So all these Swissies at the moment, the bias should be to buy everything against the Swiss. That's the fundamentals on it. But as you can see, not happening that way on a lot of the Swiss franc pairs at the moment. So fundamentals you can kind of kick into touch. This thing is dropping interest rates. Inflation is coming down, which puts pressure on dropping interest rates. Unemployment isn't moving, which doesn't really affect it in any way, shape or form. So everything should point towards a weak Swiss franc moving forward, but that's not happening. Yeah. So again, this is a little bit like the yen. You can kind of flip a coin on it. Best off trading it with a stop loss based strategy, unusual risk reward. It moves really fast, really hard. We know that it's the Swiss franc. It is notorious for big, strong, multi-day, multi-week moves. It's what it does. And when there's a problem, as I said, it's a safe haven. Yeah, you'll easily put in a 225 ADR 2 days in a row if something goes wrong. Go and look at the kickoff of the Ukraine war. Go and look at anything that's ever gone wrong in the world. You see the Swiss franc pile into like crazy. So at the moment, that's where we stand with all the Swiss franc pairs. It seems to be fairly range bound-ish, but it's not the sort of thing that you're going to find it very easy to get out of positions on, because there is no pullback, there is no market structure. It's very big, strong, elongated moves that you kind of get a push, nothing, push, nothing, push, nothing. Yeah. So not really great for position trading at the moment. So, but the bias should really be that pretty much with everything at the minute. But it isn't working that way. If you look at it on a higher time frame, yeah, we are sort of bullish, but not, it's not substantial enough, is it? Everything is kind of moving in the right direction against the Swissy, but it's just crazy, the movement, the speed, the problems. That's a great example of a safe haven run that didn't work there. We had that safe haven move. And this is the sort of thing the Swiss franc will do, is like panic, we've got something going wrong. Oh, no, it's not. All right, okay. So they pile the money into the Swiss and they realize, actually, they're not a problem. We'll pull it back out again. Yeah. So you're going to get these nutty moves on it. So at the minute, you can trade it in either direction in theory. But it's the sort of thing, if you get a trade on from an RSI extension, for example, it's what you just want to hold it and sit there and don't look at it for a week and then come back and find out what you've got. That sort of trade. So not particularly easy to analyze at the moment. Don't forget as well, if we get a change in interest rates on the US or the pound or anything like that, they are going to weaken dramatically. And if that Swiss franc suddenly decides to power up at the same time, you're going to find yourself, hitting a weekly range by Tuesday type thing and not stopping until you get to 200% of its weekly range. So just be very, very careful. So those are all the Swissies. Steve, got to go to work. Have a good holiday. I will be back in just over a week. During my plane takes off, it's all still going very wrong at the airports. My wife's on a group for the holiday company we're going with. People are still saying today, I've been stuck in my airport for over 5 hours. And there's other people saying they were meant to leave last Thursday. They're still there and they haven't gone home. And they've been stuck in a horrible hotel. So, yeah. Not the best time to pick to go on holiday, was it? Anyway. CrowdStrike. Not buying your shares. Right. Aussie New Zealand. Aussie New Zealand at the moment, very difficult to call because of the bias being a long against a long. Whenever that tends to happen, you'll usually find the Australian wins out eventually because obviously it's a bigger economy. That seems to be happening at the moment, but the Aussie New Zealand, we're going back here to 2017. Yeah. The Aussie New Zealand is a very range-bound instrument. It's commodity pair against a commodity pair, a trade partner against a trade partner. They both have news which affects each other. So we've just broken out of this range that we've been looking at for the last couple of weeks. We pulled back inside it, and now we've pushed up again above it. So if you look at this from a daily perspective, we have these two the orange lines are basically those resistance levels. We've got a breakout which failed. We've got a breakout which failed. We've got a second leg up. If this is an M pattern reversal, this is exactly where you want to be selling it on the second leg. Yeah, we haven't had a reversal alert on the daily, but if you look at the 4, there you are. We're on the second leg. So that was your reversal alert which went in last week. We're now retesting. If we don't invalidate that high, this is your second leg of the M. And then obviously we've got a lovely pullback on this, and potentially if we're going to stay range bound on these two, and there's no reason why we shouldn't. If you look at the last sort of 6-7 years, that's what we do. We just go up and down all the time. At the moment, we're up at highs. Sense. There's no reason interest rate for either of them to be stronger than the other, so it's a lovely sell. And if you can hold it for the next 4 to 6 weeks, it could be an incredibly profitable trade. Again, from a position trading perspective, this one does tend to go into parabolic runs. All my testing has shown it's not the greatest thing in the world to position trade, as you can see from here. The trouble with it is it always works, and that's the sort of Achilles heel with this particular instrument. It always works, as I've just shown. Yeah, it's range bound. Always is. Always has been. That's what it does. The problem is, if you get in too early, holding the trade is what's difficult because it goes into these big long runs for weeks on end. As I got stuck there, and I said, didn't I, when I got out, we will be back down there within a week. I mean, it took 2 weeks, but we got back down there. Just timed it wrong. So, yeah, one of those things where you need to be just a little careful with your entries. Probably the best entries to take on this one, as you can clearly see, are the 4-hour RSI 80s. This works potentially pretty well. Lovely exit there. That one worked first time. That one didn't work. So this is what I mean. If it is going to go into one of these parabolic runs, there's nothing you can do about it. It's like just goes on steroids, basically, the Aussie dollar. It's the bigger economy. If there is no reason for it to drop, it won't. The other problem we've got at the moment is the New Zealand dollar is acting completely erratically on interest rate decisions. So these are the interest rate decisions on the Australian dollar, on the New Zealand dollar. Yeah, they hadn't changed, yet the market reacted like that because we didn't change the interest rates. There was no reason to change the interest rates. They said they weren't. They forecast they weren't. The market didn't expect them to. They didn't do it, and they reacted like that. Totally illogical, but that is the market. It's illogical. It can stay irrational longer than you can stay liquid. So right now, though, it's a very good-looking short. That's the last New Zealand interest rate that didn't change. And again, we've just had these stupid moves. CPI numbers and interest rates at the moment for the New Zealand dollar, not paying any attention. This, to me, looks like a false breakout, though. We haven't actually managed to get anywhere, and we've had some fairly strong selling coming in, which looks like it's holding. And this week really is your key. If we don't hit above ADR this week, I don't think we'll get back up there. It'll be down. So we're up at the highs of this range. We're breaking out of these levels, or trying to, and failing to break out of these levels. I think this is a false breakout. We'll be coming back down and testing these lows. If we're going to hold market structure, that's exactly what we would expect it to do before we put in a new leg up. So everything's pointing towards a short. All looks good for shorts. Aussie US, US dollar changes its mind every couple of weeks. I'm trading the US dollar in both directions at the moment. I don't care whether it's long or short. Morning pot DJ, Abdi. US dollar, we've got interest rates drop now forecast for September. But like I've said in here over the last couple of months, many times, as you can see, trading it in both directions, shorts there, long there, short there, short there, long there, short there, short there. I was short there, got out, and now I'm long again. Doesn't really matter because every week to 2 weeks, we change our mind on what we're doing with the US. We were going for a July drop. Then we went back to September, October. Now it might be November, December. Sorry, guys, it's going to be 2025. Hang on a minute. Let's bring it forward to July again. No, hang on, November. Now we're at September. Yeah, where are we going to be next week? I don't know. Doesn't matter. It's not going anywhere, is it, the US dollar? The interest rates are coming down in September as of today. The fundamentals are pointing towards them being able to do that, as the Canadians have, the Europeans have, the pound should have done, hasn't yet. So yeah, we're getting there. But you watch the next CPI number come out at a 3.1. Sorry, guys, I know we said September. We're back to January again. Yeah, literally. I know we're talking about being data-driven on inflation to drop interest rates and raise them. Yeah, it's the norm. But they change their mind 2 to 3 times between each CPI number. So you get 2 people coming out from the Fed saying one thing, and then half an hour later, someone will come out and say the opposite. Yeah, as far as I'm concerned, none of them know what's going on. And now we've got this turmoil coming up to November with elections. Your guess is as good as mine. So right now, the US dollar has always obviously been a good mover. As you can see, it's just up and down at the minute. We had an attempt to break out. That failed. We're now pushing down. Any kind of basically bullish or bearish news, you'll be able to get out of. So it's just a case of waiting for the news events. So trade it in either direction. The current bias is Aussie long, US dollar at the moment short in September, which means that sometime in August, we will probably start to sell into the US dollar, which means that potentially this should really pump. But that is dependent on them not changing their mind again on the interest rates. Yeah. So US dollar, as far as I'm concerned at the moment, until we get a confirmation from the Fed, and this is why we need to be paying attention to that Wednesday at the end of July. Yeah. That Fed fund rate is going to come out at 5.5. Yeah. If they don't, and they drop a shock on us, I mean, not that we listen to what the Fed say anyway, because they change their mind every 5 minutes. But if they do that, that's really going to undermine the Fed. That FOMC rate statement, and specifically the press conference, now we're talking about September, we need confirmation. If we get woolly, might do, might not, we're back to watching PMI and CPI numbers and having that lead the market. So the Fed have no clue. They haven't had a clue for months on end, as you can see. This is why the market's just sitting here like this and just going, I don't know, just keep buying it and selling it. It's not going anywhere, is it, until we decide what we're doing. We're in pause. So right now I'm long. I'll be getting another long on today if it drops further. Got 3 longs on it at the moment. Waiting for a pullback into propulsion on that one. Aussie US long. So it's extended on the 4-hour RSI. You've had multiple extensions on the hourly. Yeah, so that was my initial entry there on that one. And we got push up into propulsion. I didn't take it. That was the retest of the reversal short. Then we sat around last week. We got a drop down on Friday. So got a second entry. Third entry has just gone in this morning. So yeah, I'm looking for a push up into that propulsion there. Just make sure I've got TP on that one as well. So basically this low here, just looking for a retest of that, that propulsion gap, which is a break of those lows. So retest of that one. If we get continued strength on the US dollar, Fed have said no. Market thinks no. Absolutely no reason why this shouldn't break that high, fundamentally. But as we know at the moment, that's today. Tomorrow is a different story. CAD Swiss, have already covered the Swiss and the yens. So the euros. Again, euro, a little bit of a mystery at the minute. We are bearish. It's not coming down anywhere near as fast as we thought, but that is kind of not really a surprise. We've got Lagarde speaking on Thursday at 4 o'clock. It's very unlikely she'll say anything different. Last week we had the Euro press conference, which is here. So interest rates remained at 4.25, exactly what they said they were going to do. The Europeans are one of the very few currencies that actually knows what the hell they're doing. What they say is what they do. What they forecast is usually pretty spot on. So yeah, absolutely no problem with that one at all at the moment. It's coming down. We are getting the next drop in August. That's what the forecast is. They said basically in May, what we'll probably do is we'll have a interest rate drop, June, maybe July, and then we'll pause and then we'll drop again, as long as the data says what it says. Yeah, so we've had the June drop. We haven't had the July drop. We're going to get the August drop. So the market will, and that's what you see with market structure. We drop interest rates. We wait for the next one. We drop interest rates. We wait for the next one. We drop interest rates. Yeah, and this is exactly what we're seeing in the market at the moment. Yeah, so perfect spot to start selling. The Australian dollar, fundamentally bullish. We're just in a pullback at the moment. So yeah, everything should be starting to look like it should be coming down on these. So we're extended on the hourly. We're extended on the 4-hourly. Big extension there, which we've had, a sharp pullback, but pushing back up again. So we're back up at that 80 level. Again, 80 level, very, very reliable. And we are in a bear market at the moment, so no reason why we shouldn't be shorting it right now. Euro CAD, exactly the same. This one is a little bit more difficult to call, as you can see, because it is much more sideways, because the Euro are dropping the interest rates, and the Canadian are also dropping their interest rates. So the Canadians are dropping theirs this week. Now you can see that we've been pushing very hard on this one because the market has been factoring that Canadian rate drop in. So obviously it's been selling the Canadian dollar. We've had a little bit of a weakness on the US as well, which has obviously helped this along. So no reason why this one shouldn't start to unravel that move. But we're going to get weakness on the Canadian this week. So it's whether or not that weakness turns into a kind of flaggy type move, or whether they actually do weaken it further. I think there's less likelihood they'll weaken it further. When we get that 4.25, I think it'd be one of those interest rate decisions where we just get a load of sideways movement. So good looking shorts at the minute. We're just coming up into resistance. You've got another resistance there. So there's your resistance high, which is roughly 225 to 275 ADR to the upside. You're in this propulsion gap, which is the first retest on Friday. They sold it. So again, same with this one. Friday, the resistance held. So we got the limit orders at the propulsion gap getting re-added to because the market has got short bias. We are retesting that today. So if we don't break that high today and we break that low, there's your M pattern reversal, and we should start that drop. So we need to see what happens today. At the moment, we've got quite a strong euro this morning, although we'll see. Euro Swiss already covered. Euro pound, again, horrible pair to trade at the minute. 23 ADR, just doesn't even move. Very few signals on this one. And, you know, it's kind of a bit of a sideways monster most of the time. Takes a long time to get out of stuff on this. I got out on Friday of the longs and flipped short. So, yeah, nice, easy-ish exit. That was the target. And we got basically very close to target on Friday. So I decided to just take it off. Glad I did, because at the moment, we don't appear to be getting there, but I suspect we may well come and test this today. We'll have to wait and see if they come up and test this propulsion gap. What we've reacted from is basically these lows at the moment. That's a gap down, which was caused by the French election. So that's holding at the moment. So if we don't break that high today, that will become an orphan propulsion gap, and I suspect we'll probably put a new leg low in. That's going to need some strength on the pound and some weakness on the euro. Bear in mind, we're waiting for Bailey to announce an interest rate drop, which will weaken the pound. So this can still push. But this one, again, you can trade it in either direction. They are dropping interest rates regularly. We are going to drop interest rates at some point. A bear against a bear is a range. And obviously ranges don't necessarily, you know, it's all part of a range, basically. But as you can see here, you know, as long as you get that market structure, you'll get those exits. So as long as we're pushing down and pulling back, you'll have exits on it. It just doesn't move very far. So it's just not the nicest pair in the world to trade at the moment. Euro New Zealand, we are up at the double top from the last month's high today, and it does seem to be rejecting at the moment. Absolutely parabolic. Again, interest rate not changing on the New Zealand dollar, causing absolute ridiculous weakness for no reason. Just no reason for that. They may be increasing their interest rates. They are dropping their interest rates. So, yeah, should be a short. So looking at those highs at the moment, for your backup, basically. So it's a good looking short opportunity from there. You can see how range bound it is. There's your range low, very clear. Yeah, there's your range high and lower range high and lower range high. So we're making lower highs. We've got a stable bottom, which is bearish wedge. So we are looking like we want to go short from here. Massively extended. Look at that on the 4 hour, again above the 80. Not often we don't get at least some kind of pullback, but we've got a new leg up. So market's exhausted, struggling to get any higher. It's going to struggle even more to get higher, and you're going to see that sort of pullback coming in from these sorts of levels. Just waiting for them to run out, but likelihood is going to be done on a news event. And obviously, this week's Euro is on Wednesday. So these PMI numbers, and we should be expecting these PMI numbers to be pretty stable, stroke dropping, because, you know, if Lagarde's going to be able to drop those interest rates, we need CPI to stay stable. If CPI is going to stay stable, we need the PMIs to stay stable so that they don't make CPI go up. So the Purchasing Manager Index, obviously, is companies' cost of doing business. If their cost of doing business go up, they put our prices up, which makes our Consumer Price Index go up. So the PMI feeds into CPI. So we want to see these numbers coming out around about forecast, or if possible, lower than forecast. That's going to help that interest rate drop continue. So these figures on Wednesday, key for the euro. If we get negative numbers, we'll start our way back down again. Euro New Zealand, pain in the backside in 6 positions and drawdown control. Yeah. So if you're in drawdown control, obviously on this one, which you probably would be because you would have initially, depends where you got in, but you probably would have got in somewhere around here. Yeah, I mean, aggressive. This is, you know, I've got plenty of videos on the website about aggressive drawdown control. This is a prime example of this is where you do aggressive drawdown control, because you have got limit orders here selling the market. Yeah. It's massively extended. It's been through a parabolic run for 1, 2, 3, 4 weeks, solid 4 weeks up. It needs to take profit on that leg. Even if it's going to go long from here, they need to pull back to be able to get some sellers on board so that they can buy more currency, basically. Yeah. I was going to say stock then, but it's, you know, same principle. You cannot go parabolic forever because there won't be anybody left to sell. If you know, because be sitting here saying, I want to buy 200 million, they'll go, I ain't got it. You've had it all. So what do you have to do? Take profit on the leg. Yeah. This is why you get market structure. Take profit, buy it, take profit, buy it, take profit. Now all these take profit moves are fueling the next leg up. Yeah. So this is exactly where you do aggressive drawdown control. And also look at the targets. Yeah. This is where your fib comes in. Yeah. Fib, people always use fib. And I used to do this as well when I was learning to trade. I would always use fib as an entry tool. You should use fib as an exit tool. It's much more accurate. Yeah. If that thing is pushed up parabolically like that, yeah, it's going to pull back. We know from where it is at the moment. So it's either going to flag, or it's going to have a nice pullback, or it's going to have a deep pullback. Yeah. 61.8, bang in the middle of that propulsion gap. 38, that propulsion gap. Flag. Getting out pretty much break even, aren't you, on a flag, if you're lucky. So yeah, if you want to hold it for longer targets, that's on the cards. Yeah. That's a 71 retracement there. 50% retracement. 50% retracement. V-shaped recovery. Maybe we'll get an A-shaped recovery. We don't know. No one can ever tell you where it's going. But we know historically, typically, on a normal market structure pullback, you're looking somewhere between 38 to 61. That's your target zone. If your average is here, you've got loads of room. But if you're really panicky about it and you need to get out of your average, get out before the flag break level, 23. But you don't know. But right now, when you're doing aggressive drawdown control, you want to ideally be doing it at a level where banks and institutions are going to be placing limit orders, yeah, which is previous monthly and weekly highs. Yeah, banks and institutions trading long time frames trade at those levels. They trade at monthly and weekly levels, which is why you'll find they work so well, which is why they're drawn on the chart here. Yeah, they sold that, didn't hold, still broke through it, but they sold it. Yeah, limit orders will always trigger at these levels. You will always usually find at least some kind of pullback. So if you can get an aggressive drawdown control position on up here, and obviously you're going to use a stop on it, if it starts to work out, you can protect it. You've lost nothing. And if it works out, you're out. But you're using the momentum that the banks are placing at these levels to help that move get started. So good spot. Where am I going? Turkey. Turkey, as the advert says. So yuan is in, good looking short. Obviously, if it breaks this high, you're looking at coming up here somewhere, which is only 175 ADR away. So, you know, aggressive drawdown control exit. If it fails, have another aggressive drawdown control exit there. Yeah, if it gets all the way up to there, again, without a rest. I mean, just go back and look how many times it's done that. It's the market is absolutely shot. There's a good example of your flag break. That's your 23 retracement. Yeah, that move there. The worst case scenario, you're going to get a flag out of it. You can use that profit for drawdown control to get rid of some of the loss. If you're in it, I'm not in it, but I'm in Eurowod. Yeah. So as you can see, I've got an aggressive drawdown control position on this one. There's my stop loss. Yeah, if it doesn't work out, it doesn't work out. Nothing I can do about it. That is not a good place to put an aggressive drawdown control entry either. It's not bad, but it's not great. So that's support and resistance. This is our first retest of it. They're obviously not interested. They're playing through it. But we are at 150 ADR pretty much today. So we're exhausted. We've flagged. We're putting a new leg in. Good chance of coming down into propulsion. But I don't know. We'll have to wait and see. Euro US. So again, Euro US. We've got a very, very range bound pair, Euro US. Again, all the US pairs at the moment are very, very, very sideways, as we know. So you can trade it in either direction. At the moment, I'm short. This is the first trade I've had in the last sort of 2 to 3 months. I've had to do some DD control on. Mainly because this Euro's just had that little extra push this time. We've just broken out the high. We hit that last week, tested it, broke out. We failed. So this is a potential head and shoulders formation building now. Looking to come down here. The ideal scenario on this right now is FOMC on the 31st comes out and goes, yeah, you know, we said September. Those PMI figures weren't good, were they? Probably expecting CPI to go up. So what we'll probably do is maybe go October, November. Yeah. And Lagarde comes out and says, definitely doing the August rate drop. Down here. Yeah. So I just have to wait and see what the news. But as you can see, that propulsion gap holding very, very nicely. We've tested that 3 times now. We are 225 ADR away from it. So, you know, another half an ADR above last week's high. And we'll be coming back into this massive sell area here where they've been selling from. But obviously, if we're going to remain on bearish market structure, we are looking for lower highs. So we shouldn't really be breaking that level. We did break that one, though. So market structure, again, has shifted ever so slightly into a long. But if you look at it, what we're actually doing is just contracting at the moment. So good short opportunity from where we are at the moment. Obviously, the entry was last week. But, you know, we've got some good strength on the euro at the moment. So we'll see where we go. But I'm shorts at the moment. I had an exit on this on Friday. I can get at this any time, but I'm looking for the trade to hold. So what I want is for this to sit around, me to go on holiday. By the time I look at my charts in Turkey, we're done an ADR. And then I shall just leave it to go and hit target. My target at the moment on this Euro US short is this high. We've got a batch of propulsion gaps there. So that high was quite a strong move to break that high. So they needed to break through basically all of these levels, yeah, in one go. And we did it on that day through that ADR. So I'm looking for them to come and retest this level here. So worst case scenario, if this is going long, that's a 61.8 retracement pullback. So I'm targeting kind of the bigger end of the target. But obviously it could just hit this propulsion and they could buy that up again. We got a high there, which we haven't retested. So they could buy that. Yeah. So it's all about support and resistance. It's looking for where the market is potentially going next. And deciding whether or not you want to get in or out there. Pound odd, again, extended to the upside. So we've broken out the double monthly high. Your next stop is up here. So we've got this level coming up at 200 to 225 ADR, which is just shy of the 195 round number. So yeah, 195 is there. So this area they've sold shy of previously. We've broken out of that monthly high. So again, you can see limit orders triggering at this level, driving the market back down into the limit orders, which triggered at that level and drove the market back up, which pushed up into this area where the limit orders triggered and drove the market back down, except we had more buyers at this particular point in time. So we broke through. Now we're looking for the limits at that level there, which is previous monthly. Actually, it's not. It's just shy of a previous monthly. Oh, no, it's previous monthly, sorry. I just haven't got them on my chart. 1, 2, 3. Yeah, so that's the 4-month high, which again is this area here. Look. So if this does push up there without stopping, again, we're going to get a mother of all pullbacks on it, aren't we? So we are waiting for Bailey. Pound. So with all the pound pairs, we are stuck. 5.25 interest rate. Not changing. Inflation has hit target 2%. That's what we were told we were going to drop at. That's what we got to. We haven't dropped. Inflation did not change. Another reason why we should not. We should be dropping our interest rates. Yeah. GDP screaming through the roof. Of course it is. Businesses are making an absolute bloody fortune because the interest rate's high. Unemployment trickling on its way up because the interest rate's high. Yeah, it's all, every single fundamental at the moment. GDP accelerating too fast. Unemployment creeping up and staying high. Inflation dropping to target. Everything on the planet is pointing at the Bank of England dropping interest rates. And they turned around and said, services CPI was ever so slightly higher than we thought. So I'm expecting at some point Bailey to crawl out of his hole and tell us something, but he's not doing it. Yeah. Monetary policy report hearings may give us an indication, unlikely, but there's no scheduled talk from Bailey until we get to that interest rate drop. So, or we get to that interest rate decision. Not sure we're going to get it. So, really, really tricky, the pound at the moment, because if we don't get that August drop, the market is going to fall into the same view as the Fed, which is unusual for the Bank of England. We normally are pretty straight like the euro and say this is what should happen. Unlike the Fed, which change their mind every 5 minutes. At the moment, we're falling into that trap. We were told this was going to happen then. We did it. We were now told that that's not going to happen, so we're going to have to put it back a month. We've been having talk of a September rate drop. We were talking about August, and we were talking about July. You know, it's just changing all the time. So if Bailey doesn't come out and confirm something before we get there, I think that will probably be the point. But if he comes out and says, sorry, guys, we're not doing it, we're off. Yeah. So it's very difficult at the moment to figure out what is going on with the pound because we're getting literally no information. So we've broken out that high. We're very extended across the board on the pound odd. Australian dollar, bullish, pound, neutral to bearish. So that is what we should be doing with the pound moving forward. Pound CAD, very much the same sort of thing. Canadians have already dropped their interest rates, which is why I've got a little bit more of a push up there. But again, we should be seeing that move come back down. So we've got obviously the Canadian interest rate decision coming up. We may well get a little bit of a pop on that. Have to wait and see. But again, we are very, very extended. We're in week 3 now, solid straight up. 1, 2 and a bit-ish. But we are showing some signs of weakness starting to kick in. So hopefully we won't invalidate last week's high and we'll start to pull back on that leg. So we're looking to come back down into the 24.72 if we were to remain bullish, which we shouldn't be. We should be starting to flip bear. But at the moment, obviously, not happening. It's got a slight bull stance to it. But that's because we keep changing our mind on the interest rates. Pound New Zealand, same thing. Big extension to the upside. I've got an aggressive drawdown control position on this. I've taken one manually as well because we are approaching this high. So this is an old high from, when is that? 23 August. So this is basically a year ago. Yeah, so it's last year's high, basically. Last year's levels very rarely do not have a reaction. So the reason I've got this on here was because I was expecting us basically, after this massive exhaustion move from this New Zealand dollar interest rate not decision, and expecting Bailey to come and say something about interest rates. Yeah, daily 90, 4 hour 90 just doesn't happen. So that was the reason for me getting super aggressive on this last week at that level. And today we've pushed up further because the New Zealand dollar's dropped. All the Australasian pairs have dropped. But we've got this beautiful level coming up at that high, which is just above ADR. So I'm fully expecting some limit order triggers at that high. Whether it holds or not, don't know. But if we do get there, yeah, you can see the dotted line there. That's my next aggressive position. So I'll be taking an aggressive drawdown control if we test that level. So it'd be lovely if we can get there and I can get another aggressive on there because that will bring that average up into here. That's potentially got a lot of profit available on that trade. So I've, with these, one of these is an aggressive drawdown control position. One is one that I've taken myself with a stop aggressive. I've extended the stops on these double what they would normally be. Normally I wouldn't do that, but I wanted these outside of that level. So last thing you want to do, the stops were going to be somewhere around here. So I would have stopped out on that one that the EA took today. But again, you know, discretion, intervention, basically, you know, you need to look at the chart, look at left and see what's coming up potentially as levels and get outside of those levels. Because if they are going to work and they are going to trigger, there's no point in taking a loss just before you get into another trade that works. Yeah, might as well take twice as much loss on one of the trades. And, you know, it's the same thing, basically. It's just obviously less trades being taken, less paperwork, less swaps, less everything, commissions. So yeah, so looking for that area to hold on the pound New Zealand today, hopefully. Pound US dollar, that's coming down nicely. Took some profit off of this one on Friday. So that move there I took off. I was waiting to do some drawdown control, but didn't do any basically because we've got this position now in profit. So average is only 125 ADR away. And we've got decent news coming this week. So again, same thing with the fibs. That's your flag. We're beyond the flag break. Yeah. So the reason I'm not taking this off is because I'm expecting more of a pullback on this one. If again, we've got loads of news coming up. If those US figures come out badly, and there's a chance that they're going to put the interest rate decision back further, this is coming down. And if we get some nice figures on the pound, this is coming down because it's going to confirm the interest rate drop. So there we go. Apologies if I missed your answer question. I understand ORB. Yeah, I've already answered that, Mumo. I answered it after you did it. I don't know is the answer. Go and test it. It's not designed to work on H1, but test it. Change the times and see what happens. You're looking basically to trade hourly ranges, aren't you? In theory, yes. In practice, no idea. Test it. The logic's all designed to work on 5-minute time frames. So I don't know. But I did answer. The answer is I don't know. Use the strategy tester rather than me using the strategy tester to find out the answer to your question. Pound US dollar. So yeah, looking for that to come down. Already out of a portion. And I will add that back on. So there's your reversal alert that's just gone in. If it pushes up and retests, I will add again and take it off again if that is the end pattern reversal. But looking for really a pullback on this, and potentially, you know, a reversal. But again, you know, it's a big, wide, floppy range at the moment, and the range changes constantly. So, you know, there's a good chance that's going to become the new range high, and this is going to become the new range low, but it could push back down into that being the new range low. The pound US dollar is usually very, very stable. unless we've got some catastrophic interest rate rally going on, obviously, as we know. But we're not going to have a catastrophic interest rate rally on these two because they're both going to do it very similar times, it seems. Yeah, should hopefully be able to continue to trade this in either direction, same as the Euro US, yeah, at the moment. But things change, so, you know, views on it will change at some point. But if you want to be super safe at the moment, because the market is very squeezy at the moment, switching up to the 80-20 levels is your best thing you can do, because to get the 80-20 extensions, it needs to have squeezed a hell of a lot further, which means you're just getting in later. And yes, you're going to miss opportunities that would have played out before, but the opportunities you get into are going to be less squeezy and more reliable. So it's kind of that. It's always the same with all trading strategies. Everything you do in trading, there's that payoff between risk and reward and strike rate and just getting in and hoping. Yeah. So at the moment, I've been playing fairly loose on the hourly time frame. I'm tightening up now because I think the market's going to start to strengthen. But caveat on that is obviously we're going into summer trading in August, which means it tends to squeeze and contract down. So we will see. But anyway, New Zealand at the moment is very, very erratic. Again, every time we get an interest rate change on the New Zealand dollar, the direction changes. So bias for this one at the moment is theoretically bullish New Zealand, bearish Canadian. Yeah, which means it is bull. Yeah. So this is where you want to be buying New Zealand CAD. I've got one on at the moment. Basically because obviously New Zealand interest rates are not coming down. They're not changing. There is a possibility of them going up by 1.25%, although it's unlikely. It does mean, though, that they're not going to drop it. Canadians are dropping it and are dropping it again. So that is definitely more bearish. So the fundamental should be that way. However, when you get that New Zealand dollar interest rate not changing, it has a very weird impact on it. So erratic as you like, nonsensical. Yeah. There's no reason. They've never said, the New Zealanders, that they're going to drop interest rates. They've never said they're going to raise interest rates. They just say, we're waiting to see what happens with data. Data comes out not really pointing in either direction. So they don't do anything with the interest rates and the market overreacts. Same as that, overreact. Same as that, overreact. We always come back to where we overreact from. So again, I had to hold this, took a load of drawdown control on it, got out. What happens 2 weeks afterwards? We come back to where I thought we were going to go to initially. It's just being able to hold the positions, isn't it? This is the thing that people can't do. You can't hold on to something like that. Very, very hard. But, you know, if you have faith in what the market does, you know where it's potentially going. So you make your money, but you've got to hold it for weeks on end. So all the New Zealand pairs, when we get into this, well, this specifically New Zealand CAD, when we get into this propulsion gap, there's a good chance they're going to rebuy this because the fundamentals are like that. We are, where are we? 2 days away from the Canadian interest rates dropping again. And look at where we are. Yeah. We are less than an ADR away from getting back to that buy zone. So another down day today, another down day tomorrow. We're exactly where the market wants to be positioned to rebuy on the next drop of the interest rates. So this looks like a beautiful long from where it is at the moment. Barring obviously any shocks from the Canadians, i.e. dropping interest rates, coming out in the press conference and saying we're going to give it the rest of the year. Oh. Yeah, you know, you can't put anything past any bank at the moment, can you? So, yeah, longs at the moment on this one. This is a single position, so the EA is running this on a 0.5% target, 0.5%, 1% target. So if this works out and goes 0.5%, I'm out. If I need a second on it, it will take 1% profit. So it's just basically managing that automatically for me. But if you want an upside target on it, So that was the entry there. I mean, you got lower highs going in at the moment, so assume the worst. But the fundamentals should really point to coming up and retesting that. So New Zealand, US, again, got buys on this one at the moment. Target is that propulsion gap. So again, bullish bias at the moment, assuming we don't get any shocks from FOMC. There's no reason why we shouldn't be, a bullish bias on this one. So ever so slightly bearish because we haven't been doing anything with interest rates, and we are contracting into the when are we going to make that decision. So long at the moment, but you can long or short this at the minute because there's no real reason for them to do anything on this for a good few weeks at least, into sort of mid-August, until we get that next interest rate drop. So we know we're not going to change it on the next decision. It's going to be the one after. So, the market doesn't tend to move until like 4 weeks, 3 weeks before the interest rate decisions. So, plenty of time on that. Trade it in either direction. So, long's on at the moment. Support we got coming up here, which is basically the next long. So, if we get a nice bounce out of that area, average will be down. Be a nice little profit. But waiting. Just waiting for some bull market news on that one. US dollar CAD, been trading this one like up, down constantly. This is the first time in this year, I think. Certainly since April. This is the first time I've needed 3 positions on one of these, 3 trades on one position. Yeah. So we had a short there, long there, short there, a long there, short there, long, short, long, 2 shorts, long there, short, short, 1 long there, got out early though. And this one basically, short, short, just taken the 3rd one today. So this is the first trade literally in the last 2-3 months where I've needed to put 3 positions on this. It's just going up and down. There is no reason why it won't continue to do that. Yeah. Canadians are dropping interest rates. US are going to drop interest rates. It makes it range bound. So, at the moment, obviously, we're going to get some movement on the Canadian dollar. So there is the chance that that Canadian dollar interest rate change throws a fly in the ointment, and we get a rally off of it. Some weakness in the Canadian. I think it's unlikely, but we've got the double monthly high and then that level coming up. So worst case scenario, that'll be of position 4. We've got limits triggering at that level. We know it's double monthly high. There's going to be limit orders sitting there. It's a big sell zone. So yeah, that's what I'll be looking to get in with the 4th position on, or the EA will get me in anyway automatically. If it comes down this week on the news anyway, fine. If they decide, the Canadians, that they are going to drop interest rates further than expected, or the press conference reveals that they're going to start moving up into 0.5% increments for any reason, again, no real reason why they should, because that inflation figure isn't anywhere near the 2% target yet. It's getting there, but it's not at the point where you need to start dropping 0.5%. You might find that it pushes up and we have to come back and retest that level there. But it's going to, chances are low 10%, isn't it? So yeah, looking really good for shorts, like it. Got a fairly decent target on it. Looking for a nice push down. No reason why we shouldn't come back down and test range low. So nothing's changed fundamentally on this for the last 3 months. Nothing's planned to change fundamentally on this for the next month to 6 weeks. There's absolutely no reason why that shouldn't just continue to do what it's doing. So sales up at the highs. US dollar, Swiss, and yen I've covered. There we go. That's everything. Yusuf, can you look at the pound pairs? I've already done them, Yusuf. Go and watch a replay. I can't go through the whole analysis again because you're late. Sorry. Turn up on time. Where's my stamp? There you go. Late book. Yeah, we'll see what happens today. But as I said, today there's no news. Tomorrow, not really any news. So Wednesday is your first market mover this week, euro. So the PMI figures coming out for the pound and the euro, and then we've got the CAD rate and obviously the US PMIs as well. So yeah, big day Wednesday. So be prepared for that one. I won't obviously be around for it. So there's no interest rate decisions until I get back on the 2nd of, assuming I get back on the 2nd. Let's see if CrowdStrike manages to crash the entire planet again. Anyway, I don't mind being stuck on holiday. Getting out there, that's the thing I'm worried about. But yeah, so there's no real interest rate decisions till I'm back. So this day, the first day back that I'm streaming, which is 8 o'clock that morning, we will have already had a CPI number and an interest rate decision. And we're going into, obviously, that day FOMC. So you will probably find the start of next week will be fairly quiet because the market isn't going to want to do an awful lot with the US dollar 2 days before potentially a shift in fundamentals. But we've been saying this, feels like we've been saying this for 18 months. It's not been that long, but we've been saying every FOMC, this could be the big one. And, if you go back and look at every FOMC that I've ever looked at over the last 6 months, I've said, this could be it. This could be the one where they announce the drop. They never do. Because they're just not getting there. It's stubborn. It's not stagflation. They say it's not stagflation, but it's certainly stagnant as far as I can see. It's not coming down enough, is it? So, yeah, we will see. But again, as soon as we get that first confirmation of September actually out of the Fed's mouth, rather than just appearing in financial juice because a Fed guy has said something or traders have factored in, that's just rumor. Yeah, that doesn't mean anything. When the Fed come out and say, we are confident inflation has come down far enough and will come down over the next 4 weeks to drop interest rates in September, that is when the market will start to sell that US dollar. Until then, it's just going sideways. So every single time we've got to an FOC, it's been the same story, hasn't it? We'll wait and see. What do we get? That. That's it. That's all we get. Whipsaw. So we'll see what happens. Oh, goody. Hedged on the DAX as well. DAX has taken off. What's that euro doing? Yes. Yeah. I mean, it is coming down. I was going to say I would expect some weakness in the euro if the DAX has managed to take off to that extent. So yeah, we got a bit of a weak euro starting to kick in this morning, which is good. It's holding this ADR. A good hold of ADR there. Lower high going in. So we're looking for a lower low break. And then obviously that will give you push back down below last week's high. Get the reversal alert. Start that move off. We got obviously the numbers coming out this week, so on Wednesday. But like I say, it's going to be one of those weeks where you're going to be sitting around today and tomorrow, and likelihood is the market will push and it will pull and it will push and it will pull, but it won't really go anywhere because we're waiting for these figures. So it's that horrible situation where we're getting the news, nothing, news, nothing, news, nothing, and that's what we're getting. No nice market structure, no nice normal banking, no nice normal directional bias. It's just market panic. Panic and just carry on panicking. But it's coming down in the right direction. Right, that's all I've got for you today. So I'll be back next Wednesday. If you didn't catch it at the beginning of the stream, if you go to the live room. So I'm off all this week. And back Wednesday next week for FOMC, and I will be off on holiday. I will be in Telegram and Discord, once, maybe twice a day. So if there's any questions or anything, feel free to ask. But yeah, I'll be basically mostly unavailable due to being all-inclusive, which includes sun, water, and alcohol. So those three tends to lead to many snoozes and inability to operate keyboards. So if I say anything stupid over the next week, you know why. Anyway, seriously, I've got kids. Mainly involves snoozing. So I'll be back next Wednesday. If you need anything, let me know. I will be around. There's other people that can help you out, obviously, in the groups as well. But fingers crossed for everything this week. Hopefully we start to undo these moves, which we should do. Yeah, and we can try and squeeze some profit out of the month. But never mind. We will see what happens. All right, have a good one. Anything you need, let me know. Otherwise, I will see you guys next week. Have a good week.